Good afternoon, traders. I hope you've been having a great week in the market so far. We're edging our way closer to the end of the week now. We're obviously on Thursday afternoon. We've got that big market moving event of the day out of the way, which is the Bank of England monetary policy announcement. And we've just got one biggie left for the week, which is the NFP release tomorrow for the US. So we're going to go through what happened at that Bank of England monetary policy meeting. We of course went through the preview yesterday in yesterday's market movers video. So we'll update on what's actually happened. But before that, I just want to quickly ask your opinion about something. So you may or may not have noticed that this morning in the community tab here on the Market Movers channel, I did a little text post with just a list of bullet points of things that I'd picked up as key points while I was doing the rounds reading the financial news this morning before my trading session. So I would just like to know from you in the comment section, just let me know, first of all, whether you even noticed it, whether you're likely to notice it in future, and whether you find it useful, whether it's something you are likely to read or not. Please just be honest about it. If it's something you're not really interested in, you don't care, just let me know, because then I don't have to spend time doing it. And with that in mind as well, also let me know what sorts of things you'd like to see more of here on the Market Movers channel, not on the Duomo channel, but here, focusing on the fundamentals and the markets, because we always read the comments and it's nice to get some feedback or some suggestions, and we can keep them in mind because we have plenty of videos coming on this channel. Anyway, let's get on with what's actually important today, which is of course the Bank of England. So there were no surprises with regards to their monetary policy at this meeting, but the bank has changed its forward guidance and it will now begin to unwind QE, quantitative easing, when the interest rate is at 0.5%. So that's down from the benchmark they set back in 2018, which was 1.5%. Now, this could mean that the bank wants to let unwinding QE do most of the heavy lifting in regards to tightening their policy, and therefore be able to maintain a lower interest rate for longer, although rate hikes still aren't expected to happen until 2023. So if you watched yesterday's video, you'll remember that one of the big talking points, as it is everywhere, is obviously inflation, and more specifically, the fact that inflation had overshot the bank's forecast for 3 months in a row. Now, Andrew Bailey, the head of the Bank of England, the governor, he did say that they're focusing more on the medium term, but the bank does now see inflation hitting 4% sooner than previously expected by the end of this year, and in their words, some modest tightening of monetary policy is likely to be necessary to control inflation over the next few years. Now, this isn't the UK side, this is actually the US side, but something I picked up on was what the Treasury Secretary Janet Yellen said, which is that she also sees inflation as being transitory, and she got a bit more specific and said that towards the end of this year, she thinks that the monthly inflation figures will be more in line with the Federal Reserve's target, which is obviously average inflation of 2%. So what this means is that the annualized inflation figures will stay elevated for some time, but around December, maybe even November, if she's right, we would start seeing 0.1 to 0.2% per month for inflation, back in line with those Federal Reserve targets. Now, you may remember from a couple of weeks ago in that video we put out about inflation, we talked about the US situation mainly, but also the UK and Europe. And we were seeing that the UK was lagging behind the US by a couple of months, a few months. And the UK is expected to reach 4% inflation towards the end of this year, like the Bank of England have said. But if they're lagging behind the US a little bit, if the US are dropping back down to those monthly figures of 0.1 to 0.2%, maybe the UK will soon be on that as well. So maybe things will start to settle. Now, in terms of the policymakers and how they voted, Michael Saunders, who we also mentioned in the video yesterday, was the only one who voted to begin tapering now. However, other members still see inflation as being transitory, and they want to make sure that they can hit the 2% target over the medium term. Now, this does mean that they're beginning to discuss rate hikes, and it will be discussed in future meetings as well as their tapering, so it could start to become bullish for the pound. And in terms of the markets, yesterday I said we were looking at Euro GBP. You can see this area at the bottom, this reversal zone that I pointed out. We did stall there again with momentum, and because of that momentum at a significant level, we can often expect it to overshoot. That's why we have the triad of price action that keeps us out of those moments when it closes at lows, although we wouldn't have been trading this in the build up to the Bank of England meeting earlier today. But you can see it did overshoot and it stalled out just to that 127.2 of the confirmed Fibonacci range, and it's back above that reversal zone now. So I would say that already this is a good chance to be looking for long opportunities if the setup presents itself, not just jumping in straight away. And if it does manage to break through eventually, which, you know what, if it wasn't going to do it just then with the bank meeting, then it's probably unlikely to. Of course, unlikely doesn't mean it's definitely not, but this is a very strong path of resistance. But if it does break through, we of course have those same levels I pointed out yesterday. Now, the second market I've been finding very interesting is the FTSE 100. It's obviously UK stocks. This is the daily chart here. We can see we're at this really critical point in terms of the context of the market, and the path of resistance is very, very strong there. We've obviously got the swing high from the previous moves where it's failed in this area. I've added the reversal zone just because in general that area is going to be resisting the price. Beyond that, we've got actually an accumulation of the extension levels, not just this one that you can see here, but there's also a more recent one that puts the extension levels as confluence up here. So there's a very strong path of resistance. What this means is that either already now, if we find the right opportunities, we could be looking short, or if it's able to push through those, or we're able to trade towards them, we could be taking that opportunity as well. But it means the decision points become very clear. And in fact, the hourly chart here on the FTSE is some of the nicest structure you're going to see. You can see we're actually kind of stalling at this trend line at the moment. We've had that higher high before. We've now had a lower high potentially, which means there could be weakness in the structure. If we broke through to the other side of this trend line, I'd be looking for retest for the short trades, assuming that those daily paths of resistance are holding up the price. Just intraday or intra-week, I'm not talking about a long-term move here, but if this can continue and stay above here, already you can get a profit buffer up to that previous high, and then we can decide whether we want to use our trade management to be able to challenge that path of resistance above the price to see if we're going to push through. Because if it got through there, it would have to do so with momentum, and if you're on the right side of a move like that, it could be extremely profitable. So plenty of ways to trade these markets over different time horizons, whether you're very short term, medium term, or longer term. There are ways that we can approach this. The best thing to do is just to be patient, wait for the right setups, and if you're a member, then check out our morning markets each morning where I talk you through these markets. Alright guys, so don't forget, leave me that comment with your opinion if you could. Hit the like button if you found this useful or interesting. Don't forget to subscribe if you haven't already, and if you want to know more about how I trade, the free training is in the description box down below. Thanks a lot for watching, enjoy the rest of your trading week, I'll see you tomorrow. Take care.